Welcome and thank you for making today happen as well and attending to Truey's Thought Leadership panel series. Today we're discussing the road ahead for natural capital in Australia. And for those who I haven't met before, my name's Steve Walpole and I work in the partnerships lead role with Truey. Feel free at any time just to enter in questions into the chat. We've parked a good 15 minutes or so for Q&A at the end of the conversation with our panel speakers. And we'll record the session, send out a copy so you can share with other team members and also for those who couldn't make it today. So I'm joining in from Gundungurra country. I'm about 900 metres above sea level in the beautiful Blue Mountains. And speaking of running, I used to absolutely love my trail running, just haven't been doing it a lot lately, but it was always a joy. I'd like to acknowledge the traditional custodians of the land on which we gather today, the Gundungurra people. I pay my respects to elders past, present and emerging, and extend that respect also to all Aboriginal and Torres Strait Islander peoples here today. Welcome again, everybody. So just briefly, just while we're waiting for a couple more people to join in, we all know the enormity of the challenge ahead to stimulate and cultivate natural capital in Australia. We had the federal government signalling for us all to respond to that challenge and accelerating natural capital and the nature positive movement. We finally had the goals and some targets as well, but we're still lagging behind with funding on the ground, which is critically required. Before joining our session, I was reflecting on my biggest takeaway after attending last year's Nature Positive Global Summit in Sydney. We had about 196 countries attend that one. And that insight is that we need to speak the same language as investors ASAP. If we're going to truly bend the curve up and to the right for natural capital to be redirected to the environment, hence bringing together experts today that can share how they're playing their part and what is still required. And what a week for gathering here today regarding things that are important to us. It was only 10 years ago that the Paris Agreement was set, and now almost the same countries are at the COP30 this week, maybe slightly different motivations, sadly, with one or two of the big ones. But hopefully we can advance serious targets for repairing nature, protect communities with climate impacts, and prevent runaway global warming. But if we don't close that gap on speaking the same investor language, then private, corporate, philanthropic funding of environmental projects will just trickle along underfunded. And we know that minimum we need to invest in Australia is 7.5 billion. And we know that when we combine green treasury bonds, government grants, large philanthropic, corporate dollars, we're lucky to crack 2 billion per annum. That's a massive shortfall, and that 7.5 billion increases dramatically each year. We don't hit our nature repair $7.5 billion target per annum. So enough from me. Now that everyone's pretty much logged in, without further ado, I'm going to hand over to our panel. I've got 4 big questions to ask our panel today. And Sam, if you don't mind, I'll start with Professor Sam Capon. And would each of our panel speakers today just briefly introduce themselves, and secondly, what areas of natural capital you're involved in, and whether it be on certain boards that you represent in nature, or even your day-to-day projects that you're involved in and collaborate on. Over to you, Sam.
Thanks, Steve, and hi everyone. I'm Sam Capon. I work at Griffith University. I come from a background in ecology, and I suppose, like many ecologists, with quite a diverse career. I think at the heart of that has been ecological monitoring and assessment for environmental water or riparian restoration, wetland restoration, those kind of things. And I guess with the rise of the nature markets and carbon markets, that has suddenly, having its time in the sun, I guess, as being critically important, which is a surprise to me at this stage in my career, but enjoying that. And I guess it's what I really care deeply about, is our capacity to make really defensible and equitable claims about the state of nature, and also the results of the way we're intervening in nature, both to report and evaluate on our efforts and our investment, as well as to guide and prioritise actions going forward. And for me, most importantly, as a way of us all working together with our diverse interests and ways that we relate to nature, so that we have the best possible future for everybody. So I come from that ecology background. I'm moving into about halfway through a second PhD in philosophy. So I'm really interested in the defensibility of science, so philosophy of science and philosophy of ecology in particular, and hoping I end my career as a philosopher, who no one will want to listen to, but that's my arc. In terms of practical engagement with natural capital, I guess probably the most significant engagement I currently have is co-chairing with Dr. Ian Creswell. This is a mouthful, so I know I was asked for brief, but blame the department. For DECUE, hopefully most of you know without me spelling that out, the Biodiversity Assessment Expert Reference Group, which we call the BARGE. So the department set this up in conjunction with the Statutory Committee for the Nature Repair Market to inform on matters of biodiversity assessment. So we've helped develop the Biodiversity Assessment Instrument, or the BAI, for the nature repair market, and now reviewing the methods as they're developed and the different biodiversity characteristics and so forth. So that's been lots of fun, talking lots of really amazing people from around the country. We have First Nations members and members from different realms. I also sit on the scientific advisory boards for the Murray-Darling Basin Authority and for DECUE, the Lake Eyre Basin panel, and have recently been appointed to the as Australia's focal point to the Ramsar Science and Technical Review panel, which I get to go to the IUCN headquarters in a week's time for my first strip meeting. And I think while they're not directly engaged with natural capital, I think this is something that's really starting to enter their thinking, and making sure that natural capital accounting that's done for state of the rivers reporting and so forth, state of the basin, state of the environment reporting, aligns with what's happening. And I think that's really important for the challenge we're addressing here today, that you can have that alignment and draw on those bigger government kind of funded data sets and approaches as well. In terms of day-to-day projects, I'm involved in so with the costing of nature repair, I worked with the Wentworth Group on the nature repair blueprint that was launched last year, and we're now in the process of downscaling that for particular regions. The first cab off the rank there is the West Kimberleys, and we're working with the Indigenous Corporation, the Martuwarra Fitzroy Crossing Council, to align global and national conservation objectives with their local objectives, and then be able to select, prioritise and cost actions for nature repair in that part of the world. I'm also leading a project for the New South Wales government, looking at developing a water quality co-benefits framework for carbon farming across the state, which has been exciting and challenging. And I'm probably extending the brief, so I might stop there. Thank you.
It's always dangerous with someone with such a big portfolio of interests. Thanks, Sam. Mel, we might swing to you.
Thanks, Steve. So I'm Mel Cutler. I'm the Nature Finance Lead at the Australian Land Conservation Alliance. For those who are unfamiliar with ALCA, we're a member body, like a peak body for nature. So members range from individual landholders who are enacting private land conservation on their properties, through to organisations that operate either at a national or a state or more local scale. The bulk of those organisations are environmental charities, but we also do have some for-profits in the carbon project development space, and we have a government entity as well who's attached to a state government. So when we're talking about what we're seeing on the ground with nature, and given that my role is nature finance, I'd say that we're seeing biodiversity loss is really concerning. There's not enough money to do the work that needs to be done, and there's a real disconnect between the conservation side, who are really good at developing projects and delivering those, and the capital side, the people who are able to fund this work. And often, and I'm guilty of this myself, because prior to ALCA, I came from the private sector and spent about 6 years in a bank. You often hear this mantra of there's no shortage of capital, let's just find the projects. But then on the other side, you hear the conservation side say we've got so much to do and not enough money to do it. So ALCA plays a role in trying to bridge that divide between the capital and the conservation. And that's probably the best way to summarise the role that I do. And we actually have a project underway at the moment when we're talking about how much funding is available for nature, and to say there's pretty much bugger all. we actually want to quantify that. So we've got some work underway to develop a tool that will be available on our website, hopefully by the end of this year or early next. And that will demonstrate how much money is actually available for nature in this country on a year-on-year basis, and dividing that into money coming in from the public sector, the private sector, and the philanthropic sector. So once we understand the actual narrative there, that really helps us make the case for why and from where more money for nature should be coming from.
Thanks, Mel. That's so helpful. And Rocio, just to you.
Thank you, Steve. Yes. Well, my name is Rocio Rata, and I'm the Director of Growth and Advisory for Pitt & Sherry. It's an engineering firm. But I guess my role is more on reducing the pressure on natural capital. So we work with both the private sector organizations in mining, energy, infrastructure, and regional development type organizations, but also with government and asset owners who are looking to put large projects out there. And how do we do the influence in terms of incorporating nature, biodiversity in first the demand signals and what they ask for and how they define the outcomes of their projects, and those outcomes to have a shared value in preserving and restoring and protecting nature first and foremost, but also on industries that can incorporate and see the material impacts of their operations on nature, but also their reliance on nature for them to be financially viable, and also their supply chain. So it's really on protecting and enhancing that through business models and supply chains, and also how government and asset owners define projects to incorporate, well, how are we going to protect and incorporate nature? And a couple of examples is we're working in Tasmania with the Water Authority, NRMs, but also local communities and local government to define what placemaking in a community activation area that local government wants to do will have a downstream effect or incorporate nature because they're right by a river in Launceston, one of the biggest cities in Tasmania. But also what are the impacts on stormwater management and wastewater infrastructure that the Water Authority is looking to invest and do. So where is that right at the intersection between the three, and how to protect that. So, and another project we were doing as well with data centers and how we design nature-based solutions. So looking at incorporating wetlands for water management and discharge and effluent. So really to integrate the thinking and the design to look for a natural solution, particularly when transport and discharge and the hydrology of things. How can we incorporate nature into that and deliver a place for people and communities? So really more on that sort of developing those systems of production and consumption of it. Thank you.
Great. Thanks so much, Rocio. It was wonderful that Sam, Mel, and Rocio could make today and share their time. They come in through such different doorways, from academia to on the ground, working with engineers, through to working with members and capacity building. So we felt that those three different doorways are just all part of the web of solutions that we're all, striving for. So another question. We might go in the same order, if that's all right, Sam, Mel, and Rocio, just to keep the flow. Sam, what are some of the significant challenges we're facing with unlocking capital to nature-based projects or initiatives?
So to my mind, the biggest challenge is addressing these tensions between practicality and usability for project proponents and, people sort of actively in the market on the ground, and, and then the need for really defensible, credible, nuanced and equitable processes, including the science, but not limited to the science, that mean that we're actually going to get real, tangible and desirable outcomes for nature. And that tension's particularly pertinent, I think, because we have still a lot of knowledge gaps with regards to how we understand and describe nature and the way that we intervene with it. So there's, just natural complexity in itself and the spatial and temporal dynamics and different levels of organization, but also I guess biases and shortfalls in funding for research to understand different parts of the landscape. So an example there, I think that's also really relevant, is that a lot of these frameworks are being developed from a terrestrial kind of perspective, and yet a lot of the investment is happening around freshwater because you get many more benefits in terms of ecosystem function. So we're trying to fit square pegs into round holes a lot of the time, and apply frameworks that have been developed for terrestrial fauna habitat, for instance, to wetlands or riparian systems where we're concentrating a lot of our restoration work. We also have a lot of uncertainty related to climate change, as well as uncertainty regarding the trajectories that our natural systems are already on. They're already responding and have that lag time to pressures that have happened in the past. So when we're kind of trying to define a starting condition or something in order to assess and evaluate changes that have accrued in response to our interventions, we need to recognize that they're already kind of on a path of change, and I think that can kind of influence the way we make claims. And then, as a wannabe philosopher, I increasingly hitting up against this really, really entrenched notion that a lot of us have. It's really hard to rid ourselves of it, that there is a balance of nature, that there's a way nature should be, and that is therefore detectable using kind of unbiased scientific methods. When, to my mind, nature is emerging and flourishing, just as human lives and human settlements and industry and endeavours also are, and adapting to those changes. And we can't see into the future, and we're better off protecting and enhancing the capacity of nature to adapt and respond, rather than trying to lock it into some kind of brittle historical state, which I think increases more risks. But that's scary, right? Because it means there isn't one answer or one baseline or one reference state to judge. It means we need to participate collaboratively and co-design, and that's the hardest part of all of our work.
Thanks so much, Sam. And Mel, with ALCA, what are some of the challenges you're seeing for your members and unlocking that capital for more nature-based solutions?
Yeah. I'd say there's two big challenges at the moment, and one of which is the affordability crisis poses a real challenge for us. And certainly a lot of our organisational members have been getting messages from either existing or potential new corporate partners to say, look, we're really worried about the financial well-being of our employees, our customers and the community. So any funds that we might have had available for philanthropy or wherever that funding was paid for is being rediverted to societal causes where we feel that we're kind of proactively addressing those concerns. So nature is perceived to be competing with social good, and therefore funding is being rediverted. Another big challenge at the moment is this year is the first for Corporate Australia, or a big tranche of Corporate Australia, to comply with climate risk disclosure and reporting. And whilst I'm very supportive of that new regime and the benefits that will derive into the future, I think at the moment corporates are so focused on reporting and compliance that they don't have any time to think about sustainability in a broader sense, or the opportunities and the growth that nature and supporting nature can provide. So we do have this situation where nature is in decline and we need more resource, but at the same time resource is being taken away, and I think those are massive challenges facing conservation at the moment.
Thanks, Mel, and thanks, Sam. And Rocio, I could see you getting excited about systems thinking almost popping up there from Sam right at the very end. I could see.
I know, I love what you said, Sam, because it's a complex system, right? Nature, it's the complex of the most. But my contribution to that question was on the backdrop that Sam just put us in terms of these developing and growing system. Is I forgot to mention earlier, I see that I'm the chair of one of the working groups at MECLA, which is the Material and Body Carbon Leadership Alliance. And, nature, it's kind of as well alongside of the whole carbon net zero targets that we've got. And one thing we're grappling with at the moment is standardized data, and data that can help the reporting, and data that can help compare apples with apples. And that's in the carbon space. And I cannot even imagine what will that be in nature when we're trying to report, and what are the benchmarks, what the baseline is, what's the starting point, what do we measure? That will be a very difficult one to tackle. But also in terms of unlocking capital, I know for a fact that investors need the data, not only to qualify whether if they're going to invest and what's the risk metric of their investment, but also throughout the project to report on their investments that they do make. Are they, performing, and do we need to divert, and how are those projects going, and all of that's through data. So I think if we can unlock that one and simplify it, that will really help.
Thanks, Ross. Yeah, we're pretty informal with our panel sessions, and I know there's a hell of a lot of people with great experience of decades of technical knowledge. Nick, did you have any other comments on Notice, mate? Just to build upon what Sam and Mel and Rossio talked about?
Probably primarily add to what Rossio is talking about there, and from TRUI's perspective, trying to look at what the gap is between this incredible capacity we've got to do great work on the ground and this potential kind of latent capital to invest. Why isn't the fire hose pouring out? And from our perspective, there's kind of this lack of currency, if you like. So we've come from a world where it's largely been government grant driven, and each of those, and sort of intentionally, it's a unique story to tell, to go through that process. So we're good at telling unique stories, but what we're bad at doing is producing an investable product that's got a consistent currency, that someone who's not of this sector can engage with, know what they're getting, know the value, have confidence in the science that underpins it, and invest with confidence. So at the moment, we've kind of got a commitment of capital, but no one's really turned the hose on because there's reluctance, because we don't really know what we're buying into. And it's largely what TRUI's been engaging in is, well, how do we develop a consistent series of metrics, way to consistently report, across different ecosystems across the country, to have some currency to be able to trade in.
Thanks, Nick. You made me sort of think also in a lot of the discussions over the last sort of 10 years in natural resource management, circular economy, renewables, and so on with corporate directors, it was always difficult for them to assess which nature-based solution type projects to invest in, with so many coming at them all the time, almost understaffed to review them all. There could be like 800 submitted to a corporation from all different communities, all different natural resource management groups. And that makes it seriously challenging for someone who does come from a science background. They're working in ESG, but day to day, they're not looking necessarily at nature-based projects. Sam, I thought I'd swing across to you again, just in regard to opportunities or trend lines that will support increasing nature-based investment. Is there anything that comes to mind?
Well, I guess the obvious one is an increased mandate. So a top-down kind of a driver. And I think if we see with TCFD, and then if we have the expectation that TNFDs are also going to become mandated in the future, that's going to be a really significant driver. I'm also somewhat open-minded about EPBC Act changes and whether or not the nature repair market becomes an offset market. I mean, I think it necessitates much stronger rules in that market, but obviously that will present a real driver for offsetting. I think that for a lot of big public-private partnerships managing natural resources, this increasing recognition for the need for good, equitable co-design and engagement of stakeholders from different sectors in planning, like bioregional planning, or prioritizing nature repair, is also a really big opportunity, because I think that the benefits for communities and nature are really huge and kind of multiply. And where there are those successful examples of communities coming together to plan, I think the flow-on effects for their economy and their kind of social capital as well as their natural capital are quite astounding. And I think in talking about that, what Mel was talking about, that kind of hesitation of investment, or people tightening their purse strings, and particularly having had some work recently in the philanthropic world, that proportion of our philanthropic funding that goes towards health and social kind of concerns rather than the environment. I think that there's an opportunity to be able to demonstrate and align these areas a bit more. We know so much about how being engaged with nature is so good for us, for our well-being, mentally and physically, park runs, for example. and also for the well-being of our community. So I think if we can do more work, I think there's a real opportunity to demonstrate alignment between nature repair and, you know, personal repair and societal kind of repair, that is where we can start directing some of that philanthropic funding, particularly, or private investment, into actions that have benefits across the board for people and nature.
Thanks, Sam. And Mel, I know that one of the chapters of your life was at CFC. I know many years ago, but when I looked at the Green Treasury bond recently, I think it's sitting at just about $9.5 billion now. It's still tilted at least 90% to your renewables type projects, and that's obviously a very important part of their portfolio. But now we're seeing about 10% in nature-based type projects, which is over that sort of billion mark, which is quite compelling. Is that one of the groups that needs to be heavily involved in trying to help natural capital move to become locked in, almost like renewables is very close to locked in?
Yeah, I think I strongly agree with what Sam was saying there, and that you got to, whether it's renewables in the private sector or health in the public sector, you've got to be able to make the case for nature in order for people to understand the value of allocating new and additional funds there. So I do see that as one of the biggest opportunities, and picking up on what I said before around the affordability crisis and the perception that providing money to nature is kind of competing with other societal causes. I think we need to find a way to get over those barriers. So find a way to be able to talk about what's in it for them when you're thinking about any particular target audience that could potentially provide funding and finance for nature. And that's actually exactly what we're doing at the moment at Alka, in developing some really practical tools and guidance so that decision makers in different industries will understand immediately what's in it for them, in language and metrics that those industries are more likely to resonate with. So whether it's talking about yield or productivity in an agricultural sense, whether it's talking about risk reduction and customer protection in an insurance sense, like how do you translate the benefits of nature to those industries in a way that resonates? And once you've done that, there should be more resource. And probably the other opportunity I would say is picking up on what I said before about the climate risk disclosure diverting attention at the moment in corporate Australia. I think we need to be better able to find the ways to leverage those climate frameworks and reporting to include nature, so it's easy for people to see how nature does integrate into frameworks and taxonomies that they're already familiar with. So at the moment, Treasury has this mandate towards climate reporting around climate first, but not only. And when you look at some of the best practice guidance they're providing corporates around climate transition planning, nature is peppered throughout that. So I think we need to be helping business understand how nature and climate go together, so that they don't just have to do something new and additional on top of the burden they already have, but that's really easy to integrate.
Thanks, Mel. I remember helping an old colleague was working on a project at Race 2030, which is the reliable and clean energy. And that was about 4 or 5 years ago, where they decided that they would put money towards attracting 25 carbon managers to go into corporations, and they would pay half, and then the corporation had to pay half. So there's probably no reason we can't do another manager role more related to nature in corporations bit by bit as well.
Yeah.
I mean, we've almost locked in. We've locked in GS2. We've locked in super over the years where it was irreversible. We locked in Medicare. We've pretty much locked in renewables. So I think it's arguably very much close to 95% locked in. So, Rosia, how do we lock in nature?
Well, I want to bring to the attention, I'm not sure you guys are across the government has released the latest version of Environmental Protection Reform Bill, which is in current review. It's looking to be Royal Assent July next year. And I had a very close look at it, and it was very exciting what they put forward. And one of those areas is talking about net gain and restoration charge. And like in our work, we do support a lot of the energy developers for new projects, and I have countless examples of, you know, site selection and initial lease agreements for land of, you know, energy projects get put on hold because they happen to find a biodiversity issue with that area that the community feels very strong about, and then nothing can move forward, right? And the whole project gets stalled, which costs them a lot of, you know, a lot of time, money, and risk to their investors. So having clauses like this in early stages of project development, for example, it just brings the topic to the attention in early planning to both government and the private sector to consider nature, but also to consider how is our project going to impact it, and also to quantify, because there is a cost, there is a charge associating to, that's why it's called net gain. So anything that I'm not able to protect or restore, I need to pay in my development application, right? So it will become financial to the project. So they really, really need to think about it at early stages. So we'll see what happens with legislation, but just having it embedded in the process, it just kind of forces people through, you know, a thought process and a planning that considers this early enough.
Thanks, Rosia. I'll take a little risk and open it up to anyone else here. Any other comments on unlocking that investment towards nature, and any other trend lines that you might be seeing in your world, in your company, your industry, that we might not be aware of in the general public so much?
I'd probably have more of a comment, Steve. Just picking up on Sam's comment about, you mentioned co-design a few times, Sam, and the importance of co-design in the planning and investment process. I would concur with that. Talking to a lot of the NRMs around Australia, you know, in the last 12 months, I'm finding the conversations, it's more the talk of co-benefits is coming up more and more, and the desire to invest in projects that don't just have a water quality or biodiversity outcome. So the social or the cultural or the economic outcomes are proving to be just as important to some groups that are looking to invest. And so I just support your comment that the need for co-design and engaging with different organisations is becoming increasingly important. Yeah.
Thanks, Dave. And funny enough, I met Dave actually involved on a water quality improvement stage 2 play space project up on the reef. And yeah, we had to get a lot more elaborate to meet the needs of all that sub-criteria, circularity, that has been pushed back to business as usual type water quality improvement projects. All right, any other comments or points to raise?
Oh, Steve, just responding to Dave as well, is that I think, you know, our NRM groups are really ideally placed to coordinate this kind of activity, you know, and that they're stronger in different parts of the country than others. I know we've got a few South Australians here, but, you know, some of our states have really set up excellent processes to finance and support NRMs. And I think almost every big public kind of endeavor that I'm involved in at the moment, it just keeps coming up how important our NRM groups are to support these kind of processes and have that history and relationships with people to do this kind of collaborative work and co-design.
That's great. Thanks, Sam. If no other comments, I was just going to start with you, Sam. If we're sitting here 3 years from now, that sort of wish list type question, what would make you feel happy with your own progress? But equally, what would make you feel happy with the progress of government and corporations pushing harder in a stronger line towards nature?
I think it's probably precisely that we're not siloing so much. I mean, we're at a phase now where there's like market developments like popping off all over the place, little things, and a lack of kind of coordination or consistency, as Nick was talking about before. And you know, I think it's not only in nature financing, conservation and interventions have been a bit like that too, like very narrowly focusing on particular goals. But I think the IUCN, for instance, has developed a framework to assess nature-based solutions that looks for that, you know, equitability across different areas and for different parts of the community as well. And I think success looks like greater integration between all of these outcomes. And rather than having triple bottom line or a 4-pillared approach or whatever, that we're designing things that recognize the dependencies of, our social, economic, cultural, and ecological parts of the system that we're intervening. So that's probably a success. And for me, that means we have to have participation in co-design from all of those sectors to make it robust and equitable.
That's wonderful. Thanks, Sam. Mel, besides 52 park runs next calendar year, back to back, week in, week out, if you're sitting here 3 years from now, what would make you feel really happy with your own progress and the initiatives and projects and organisation members that you're working with? But also equally, what would you like to see from government and corporate as well?
So there's probably two big wishes on my wish list in that sense. And one is to pick up on the topic that's been communicated a number of times now. It is co-design, but more broadly, it's about mindset. So I do feel like, and I'll just preface with, I've got 2 wishes. One's targeted at the conservation sector, one's targeted at the funding side. So for the conservation sector, my wish is that there is a nature finance mindset developed. And so what I mean by that is conservation sector is so amazing at being able to protect, restore, conserve nature, to design those projects, and really good at historically being able to secure funding from government and philanthropy. But if we want to be able to scale nature projects and therefore the funding coming in for those projects, we need to be better at recognising a broader suite of stakeholders and realising that nature will always be the core beneficiary of a nature project, but there are other beneficiaries out there who would be willing to invest in a project because they could financially benefit from that. So that requires a change in mindset to be able to design projects a bit differently, to be able to bring in new stakeholders and to be able to understand and negotiate with those stakeholders on their wants and desires. So that's my first wish. I'd say my second wish is more for nature to be intrinsic in decision making, whether you're in business or in government, because I think it's only with having that part of an intrinsic process that we will truly see people make decisions that will generate sustainable business outcomes or sustainable public sector outcomes. So I've mentioned a number of times the climate risk disclosure reporting. I think it's a great thing in the way that it's bringing climate on the balance sheet in a way that's never been done before. And my hope is that nature is the next cab off the rank in very quick succession, so that we can think about the impact and the benefit in an asset and liability sense of nature.
Thanks, Mel. Yes, I think we can walk and chew gum as well. So we have seen this incredible change and new targets for renewables, and that had to be invested in and de-risked somewhat by the government. Rossio, knowing your personality, very driven, 3 years might be too long away. Like what should happen in the next 12 months?
Well, I have clearly been illuminated, right, with my answer. I have this skylight in my house, but anyway, I want to really strongly support the Sam and Mel's answers on the coordinated approach on participation, because nature and business and even to some degree government speak different languages, and we have different risks and different objectives to some degree. But when you peel the onion a little bit, we actually are trying to tackle the same problems. It's just we don't talk with each other as much as we should. And I, in my work and in the work I'm doing in Tasmania and a little bit in Queensland with the NRMs, we're more and more finding that we just stakeholders don't talk with each other enough, and to understand what's important to the other and where are the shared opportunities and the shared challenges that we could totally be doing together, right? Because everyone's trying to get some funding for your challenge, but then if you talk to someone, they're doing exactly the same thing. So then you can have 2 fundings coming together and tackling the challenge or picking up from each other. So So yeah, it's just that talking to each other kind of thing. That if I had a wish, that would be that we collaborate a bit more just from conversations, and trying to, understand the other language a little bit more before we try to put our language forward. And personally, for me, I think just education internally. I work with engineers. That's tough. Get engineers across in design and understanding how we can use nature, and there's actually green infrastructure in design. And sorry about this slide, I'm half-faced now.
The whole
it's tough. So patience and yeah, just communication skills, and just how we can really get the point across on the nature is there to help us, and they've been doing it for many, many years. So if we can integrate it and therefore then demonstrate to the private sector the bottom line benefits of using nature instead of concrete solutions, then we're helping. Right? That will be my 3 years. Thank you.
True. Thanks, Rosia. And just circling back to that particular grant, I remember that in traditional water quality improvement, it expanded into 7 projects, which it had never really done that before. And the design of the grant and the sub-criteria that was being asked for made the organisation have to reach out and connect and discuss and, rethink how we could do things better, and prioritise those projects into impact as well. So, yeah, very true. Thanks, Rosia. I think it's fair to say we've seen targets the last few years change tremendously in a lot of different areas. We've seen nature, like an ambition for nature positive by 2030 signalled from the federal government. We've seen the Nature Positive Global Summit happen last year, and with 196 countries. That's a pretty big signal and socialisation from the government of saying, hey, keep solving these, but we need to do it at a public-private type level. It can't be just done at a public level. We've seen the Green Treasury bonds, the Nature Finance Council as well. So maybe we are seeing some of the signals that we really, really want to see happening under our feet without realising, but obviously we've got a hell of a lot more that we've got to do. I'll just open up for any questions, comments as well. Hope you're not doing your emails.
I was curious about the panel's views on biodiversity certificates and how that kind of semi-nascent space compared to ACCUs for conservation is going to change in the future.
Thanks, Steph. Does anyone feel comfortable to have a go at that question?
I'm happy to jump in. I feel like I'm a bit of an oddity, right? Because I currently work in the environmental not-for-profit space, but I have a career that spans decades in the private sector. So I kind of understand and can think along both lines, and I understand when I say something that could be contentious to one side or the other. But I guess we do need within this country policy settings that enable buyers for nature. And I'm talking beyond the current kind of ad hoc compensatory schemes that we might be seeing across some of the states. And I won't comment on the kind of design or integrity of those. But so I think it's really good that we now have the nature repair market as a first step for that. At the very start of my career, I was a public sector employee working on the predecessor to the current carbon market. It was a voluntary scheme, and, government developed that voluntary scheme and they promoted it for years. And then ultimately it kind of became mandated through the safeguard mechanism. So you can kind of see what the trajectory should be. We don't necessarily have time on our side to kind of go down that path with decades of kind of development. So how do we learn from the carbon markets and apply those lessons learnt in nature? My sense is to get broad scale buy-in, you've got to make it as simple as possible and try and commoditize those certificates in a way and mandate buyers for it. But I know that certainly there's a lot of concern in the conservation sector about doing that, because is the desire for having a tradable commodity going to have negative impact on nature? And there is a balance to be found there, I won't lie. But I do think we have to remember that it is a balance, and we shouldn't let progress be impacted by perfection. So that would be my piece. And I know that that's going to be controversial for some, but I do think it's all about finding the balance, because if we don't, then the risk of inaction is almost worse than having something there. That's my view.
Great, thanks, Sam. And I mean, we do have a little bit of a blueprint in Europe. I mean, the carbon price is significantly different north of ours. So hopefully we can keep looking at that as well. Sam or Rossio, any other comments to Steph's question?
I can't comment on specific financial markets for those certificates, but I do know a lot of organizations are scanning for projects or for initiatives that they can contribute, and that therefore they can report on their sustainability report that they've done something that is related to their industry. So it's not necessarily a certificate for a market, but there is definitely opportunities out there that companies are looking for. So it depends, back to the topic of data, and to certify or to show the validity of those particular areas that an organization can feel confident enough to support and invest, because it's relevant to the business and it's something that they can put on their sustainability report. I guess it's a step, right, to that.
Thanks, Rossio. Any other comments or questions?
I had a question.
Sorry. I just wanted to say that I think underlying what Mel and then Rossio are talking about is our capacity to say what is good for nature. And that kind of investor confidence, I think, needs to come from projects being able to demonstrate that they are addressing what's good for nature in a broader process. So having these kind of regional plans or regional report cards, and then projects being able to be situated in that and contributing. So not just demonstrating what's happening on the ground in that project site, but how they are contributing and not creating risks at broader scales by having that kind of regional framework that they're sitting in, and that needs to be, I think, invested in publicly. Thanks,
Sam. And Carla, I think you might have had a question or a comment.
Just a quick question. It's because the discussion today sounds as if we're getting that sort of offset system organised where it may cost developers if they're not protecting and restoring, and that nature risk disclosure and reporting is a good incentive for that. But how are any of our speakers wanting to comment on how we're progressing with demonstrating the return on investment for the more green investors, I guess, such as superannuation funds or others that may not be sort of forced to, I guess, just in terms of that, just because there's still that sort of gap between demonstrating the benefits and co-benefits and everything socially, but also just that monetary return on investment.
Thanks, Carla. Nick, did you want to maybe take that one? I was just remember our discussion the other day looking at the committed funds up to 2030 with most corporates.
Yeah, so we've been thanks Steve. We've been going on this exploratory journey. So there's anyone who's playing along at home, there's been lots of noble kind of commitments to do the right thing by nature, and government-wise, great initiatives as well. And that regulation will kind of mop up the laggards, if you like, but some sort of forward-thinking corporations are well ahead of that game, and we're kind of thinking that's kind of pushing things along in this realm. So you think about the 69 of the 100 largest economies in the world are corporations, not countries, and so whilst they'll abide by the regulations within countries, at a corporate level, they care sort of over and above that because their shareholders and their clients require that. So it's driven by social license, and then there are adoption for international reporting frameworks, the TNFDs and the like. And we see that largely is driving that forward. And then so we've gone through and added up the hard commitments, And we got to $50 billion pretty quickly, 50 billion by 2030 of hard corporate commitments. So this is across banking, superannuation, insurance, and then some other kind of smaller components. How that's going to hit the road, though, is kind of why we're here today, I guess. So there's this committed capital, but the pathway and the reporting, it's not clear. So how that money is going to get invested. So this relates then back to Carla's question. So superannuation, for example, and the pathway that we followed there is superannuation makes a tranche of funds available for the banking sector to use as a basis for loan. That tranche has got good land stewardship associated with it. So then we've kind of passed on the responsibility of reporting and quantifying what makes a good land steward to the banking sector to represent that. And so now this is a problem that the banking sector is dealing with. And at the moment, we see it's largely on an organisation by organisation basis. And it kind of all rolls back to my initial comment really about currency. So it's about having a consistent basis by which we can agree that here's how we measure these things. You know, and ultimately we'll get to the point where all this talk is all a bit boring. You know, it's a bit like accounting. Boring. We've worked out how to do it. Carbon accounting. 5 years ago, it was new and novel. It's kind of boring now. Like we have a system, we know how to do it, and it's just part of business. So what we're hoping to get to is the same thing about investment in nature. It's just part of business. We have standards. We know what the currency is, and it might not be perfect, but you know, it just removes an enormous amount of transaction costs. So you know that committed capital mostly gets spent on the ground, not writing reports over and over that kind of reinvestigating the same world. So that didn't directly answer your question, Carl, roundabout, but we've followed that path, and it's a topic that's totally, it's not resolved, but there's a serious attempt at trying to resolve how to report, you know, in that finance sector, because it matters. It matters about being able to consistently quantify in their world risk and nature-based risk, but just like any other risk.
Thanks, Nick. You hovercrafted pretty close to it, so we'll take it. Carla, I was, before the last 10 years, being in natural resource management and renewable energy and circularity, I was 20 years in banking and finance, a little bit similar to Mel's sort of background. And really, I feel that it's about relationships as much as goals and outcomes and working together. I know that with banking and finance, it's so risk adverse that building those relationships and getting to know each other, just like we're doing here today. We've got CEOs, program directors, partnership managers from different NRMs. We've got sustainability directors from different corporations here today, people working in state and federal government. And I think it's just the more that we get to know each other and understand what you're working on, that takes time to build that relationship. And hopefully we're fostering that today.
I think what I was really asking is, like, we all know that it's going to cost us money, not to do this, not to invest. If we're a developer or everyone, it's more about, you know, is there really an agreement on the opportunity cost of not doing it, and so therefore the actual monetary return of corporations or, you know, or other forms of investment. Because I think that was been the $1 million question from the very beginning when we started, you know, discussing natural capital and that nature having a monetary sort of value. And I just want to know whether we're really solving that. Are we solving it indirectly through the being penalised for not doing it? And have we quantified that really well enough for investor confidence?
Great.
You go, Rocio.
Yes, thank you, Mel. I have an example, might help, might not, you tell me. Because we're talking about risk, and I guess the return on investment is the risk that didn't happen, right? And how much it costs when it does happen. And the example I've got is, I cannot name the company, but it's food manufacturing on an organization whose primary input material were tomatoes. And we were talking to them about sort of their ESG strategy and doing a bit of a material materiality assessment. And when we got to the point of biodiversity, obviously we said, well, the highest risk for you, what's material, is the soil and water of your farmers who you purchase those tomatoes from, right? So what initiatives, because that's the material area, how are we investing in supporting that and supporting them? And the answer was none, and not interested, because if something happens to them, I would just go and buy tomatoes from somewhere else. And, you know, even internationally. And so, long story short, we kind of left it there because he was the chair of the group. And fast forward a few years' time, I actually was in contact with the operations manager after our project, because part of our recommendations were, you know, I understand your point, but it is material to you, and we recommend that we invest and do initiatives with the growers and in your region. COVID hit, and after COVID, there were some drought challenges in that particular region, and they couldn't get tomatoes because the water challenges, the soil challenges, and the growers, they no one will sell them tomatoes. So as much as he said he was going to do, he called international suppliers, and just because of COVID and the locking in on front sort of supply protectionism in terms of resources, couldn't get tomatoes. So that year, that whole half a year, production was stopped, and they had no stock, and they couldn't produce their product. Couldn't sell their product, and and significant financial impact of stall production cost, fixed costs continuing, and you know the whole bottom line outcome. So that is a risk that, in that moment it does not feel material, and there is a decision of no investment, and now things do happen. And then what was that cost? And so if I do invest, what is my return on investment? Well, my production will continue, right? And I will work around the way. So I'm not sure if that helps, but yes.
Thanks so much, Rossio. I promise we will finish on time. I love that story at the end. I knew tomatoes would come up. Thanks, Sam. Thanks, Mel. Thanks, Rossio. We'll shoot out the recording of this for any of your team members and people that could make it today. And just a massive thank you, Sam, Mel, and Rossio, for sharing your time and sharing your insights as well into natural capital.
Thanks for the invitation.
Thank
Have a
you.
great
Everyone, have a great weekend.
everybody.
Dive.
Everyone.
Bye-bye.
Everyone.